Yes, hello. My name is Dwayne Chess. This is for CIS 3367. Um, this will be my second and final presentation for the semester, and we're going to be taking a look at an income statement. Okay. First off, some background information. This is an actual income statement from a now defunct company from the year 2010. This was an online based clothing store. Okay, so let's get into the figures. All right, so what we have here, first and foremost, it shows that the information on this income statement is from the fiscal year ending in September 30th, 2009, followed by total revenue, which was 4154. They generated that amount for that year in total. Now, cost of revenue, you'll see that there's a formula here. How I how I put together this formula was I did some research and online, and there was a designer stateside who was quoted as saying that 34% of the cost of her clothes can be attributed to materials, labor, and ingenuity. So I went along with that 34% figure as well, which led to 1412.42. Followed by gross profit margin. Quite simply, subtract costs from total revenue, and that's what you get. Moving right along, what we have is here now is operating expenses. It's a vast array of the expenses which were incurred for that particular year, everything from advertising and promo all the way down to traveling expenses, and which leaves us with this figure. Now, this formula basically is the gross profit margin subtracted, when you subtract all these different expenses from the gross profit margin, you get this figure right here. Okay, moving right along, we have operating income, same as total operating expenses. Now, next up, we don't have anything, or this person didn't have, the company rather, didn't have anything as far as additional income or expenses. So moving right along, earnings before interest and tax. This formula will be combining these two cells right here, operating income and additional income. But since there's nothing by way of additional income, it's the same as operating income. Okay, so nothing by way of interest expense. Good. So earnings before tax. What this, is operating income and additional income plus interest expense, but there's nothing in cells B25 or 27, so we're left with the same figure. Now, as far as income tax is concerned, once again, I did a bit of research and I came across a statistic that said most small businesses in America are taxed at a rate of 19.8%. So I took earnings before tax and multiplied it by 0.198, and what I was left with was 3332.82. You add earnings before tax as well as income tax, and your net income is negative 2165.23. So what we're going to do now is we're going to introduce solver into this scenario and see what sort of interesting things we could come up with. So the first thing that you'll probably notice is that since this income statement is from 2010, the world, it has changed so much in the past 8 years in terms of marketing and promotion wise. So immediately this figure sticks out in my mind, this 3274.31. Since the advent of social media, you're not going to be as inclined to spend that much money when you could basically do your own marketing and promotions online and pocket the remainder. So what I did was, my objective at this point is to see where I would be at in terms of total operating expenses with some constraints. So I set it to the minimum. My variables that I'll be working with is B9, which is advertising and promo, B15, which is office supplies, B19, which is venue rental, And a little bit about that is, since this is a fashion line, once upon a time, the owner of this company put together a fashion show, so they had to get a venue to hold the fashion show in. So at that point, they would charge $3,000. But let's just assume that the venue has the same owner, and they say, hey, we appreciate your return business. We can rent out the venue for you at this time at a discount. So instead of $3,000, let's make it $2,250. So now we have $500 in terms of advertising and promo, $100 as far as office supplies, and $2,250 for the venue rental. So let's see where that leads us. Okay, so you notice that there's a difference in terms of total operating expenses, and our constraints were certainly honored as well. So that leads us with $12,926.59, which is an improvement, definitely. So, okay, let's cancel this and let's think of something else. So now, as far as the owner of this company, in order for them to continue, we have to really consider what they would need, day to day, to really just live and keep on pursuing this business. So I came up with some living expenditures, right? So this $3,750, that would include rent, which I factor in. I figure at maybe like on average in New York City, $2,000 for an apartment, as well as utilities, food, transportation, clothing, things of that nature. Maybe some capital to reinvest because you want the company to grow. So an extra $1,500 as far as profit would really go a long ways. And finally, what we have here is a loan payment. Now, I put together a small formula for this loan payment and said that this would be an ideal amount to pay per month to really, make a dent in this particular loan right here, 1977-19. So this would be $164.77 a month. So grand total, all these three categories would be $54.14.77. So let's see what we would have to bring in revenue-wise to hit that number. And we're going to keep these same constraints as last time, okay? So let's add revenue to the equation, and this time we're going to go gross profit margin of 14. What's that? 77. Okay, so let's see where this leads us. Okay, found a solution. Okay, with our constraints once again being honored, in order for us to make $54.14.77 per month, we would have to be bringing in a total revenue of $82.04.20. Okay, so you know what? Let's put together a report. We're going to restore the original values. Put together this report. Here's our answer report. Okay. So it shows our constraints, the original value, our final value, and everything that was affected. Okay. So all in all, I think Solve is a really useful tool that could be used in terms of crunching numbers for anyone who's business minded, who may want to go into business for themselves. I think it's could be really beneficial to know in the future. Well, thank you for your time.